In this video, I'm going to showcase one of the best indicators that we can use for volume identification. This indicator is called Time Relative Volume Oscillator. Now, to add this indicator to your chart, you want to go to TradingView. And then here, you want to load any stocks or futures trading asset. The reason why we're going to be limited to stocks and futures is because with these two options, we can actually get the volume data that may somehow be accurate. The indicator we're going to be showcasing here is a volume indicator, which may not work well for Forex, crypto, or indices. So stick with stocks and futures. The time frame should be lower time frames, so 30 minutes or under. For me, I'm going to be using the 30-minute time frame of Apple. After that, click on Indicators and type in Time Relative Volume Oscillator. This one by Flux Charts. So, according to the creator of this indicator, they say that the Time Relative Volume Indicator aims to improve upon the default existing Relative Volume Indicator by comparing the volumes between previous trading sessions rather than previous candles. As such, this indicator works best on lower time frames because there is more data to compare with. The purpose of this indicator is to show how the current bar's volume compares to the volume at the same time on previous trading days. This indicator is made up of the relative volume, which is this red-green histogram right here. And then this line, traversing the indicator window, is known as the relative volume smooth line. It also comes in different display modes. We have the total volume, as you can see right here, and the buy-sell volume option. When we change to that option, you can see that the relative volume histogram now has two colors for each bar. The red part indicates sell volume and the green part indicates buy volume. This mode is super useful if you want to know the volume distribution for every candle, which means a candle like this has significant bullish volume, but for the bearish volume, you can see that it's super tiny. This is important because if you want to take long positions, it means you would only need to look for candles where the bullish volume significantly overshadows the bearish volume. And of course, you do the opposite for sell positions. Now, aside from the volume display mode, we also have the display mode, where we have classic, which is this. We also have the oscillator mode, where the histogram oscillates between positive values and negative values for bullish and bearish volumes. We also have the delta mode, and as you can see, the delta mode has two sets of histogram bars for every candle. This is similar to the buy-sell volume mode that we had before. So in this case, the green bars up at the top represent bullish volume, the red bars at the bottom represent bearish volume. So for a candle like this, you can see that it has a super huge bullish volume. And then for bearish volume, it's almost non-existent. So this basically tells you that this candle is super bullish in terms of volume. Now, the one option I'm gonna stick with is the oscillator mode. It also contains two volume types per candle, bullish and bearish, and it's super easy to read. Next, I'm gonna add one extra indicator to the chart so we can see an example of how we can use the Time Relative Volume Oscillator for taking positions. But before we do that, let's talk about the Forex broker called HenkoTrade. Now, I've been using HenkoTrade for quite some time. As you can see here, this is my live account on HenkoTrade's web trader platform. The reason why I think HenkoTrade is a great broker is because of their low commissions and spreads. On Forex, for example, the spreads can go as low as 0.0 pips, which is actually the lowest spreads can go. And for those of us who love high leverage, well, HenkoTrade offers a maximum leverage of 1 to 500. And if all of this isn't enough, they're also going to give you a 100% deposit bonus for all your first deposits of between $100 all the way to $25,000. So if you deposit, say, $3,000, they're going to give you a bonus of $3,000, giving you a total of $6,000 to trade with. To access the bonus as well as all the other perks, well, sign up to HenkoTrade using the link in the video description. Now, back to the video. Now, open the indicator search tab and type in previous OHLC. This one by Nephew Sam. Next, type in EMA, this one right here. Double-click on the EMA, change the length to 200, make it a bit brighter by changing the color to white, and then click OK. For the previous OHLC indicator, the default settings are gonna work fine, no need to change anything. Now, how do we take long and short positions using these indicators that we have here? Well, it's actually really simple. The previous OHLC indicator plots previous days open, high, low, and close prices on the chart. And the way we're going to be using this indicator to trade is to look for instances where the price breaks and retests these levels. Also, we're going to be taking our positions only in the direction of the trend with volume. So here's an example for a long position. The first condition is to confirm that the price is in a bullish trend. To do that, we just ensure that the price is trading above this 200 period EMA. The second condition is we identify a previous day key level and then wait for the price to do a break and a retest of that level. It could be a previous day high or a previous day low. Right here we had a previous day high as indicated by this indicator. And as you can see, the price broke and closed above the level right here and then later did a retest of that level on this red candle. Now, the third condition is after we have the retest, we look for signs of bullish continuation. That is gonna come as soon as we see a green candle printed like this. This green candle indicates that the price may continue to go up after this retest, so it becomes our entry candle. Then lastly, we need to confirm that on the entry candle, there was more bullish volume than bearish volume. To do that, we're going to be using our flagship indicator, the Time Relative Volume Oscillator. We need to ensure that this last histogram bar is above the zero level and that it also closes above this red-green oscillator. At the same time, you want to make sure that the green section of it is actually bigger than the red section to confirm that the bullish volume within this candle far exceeds the bearish volume. The bigger the difference between the two, the better. All our entry conditions are met on this candle, so we're gonna enter a long position here. The stop loss is gonna go right under the most recent swing low. And for the take profit, we're gonna go with 1.5 times the risk. Letting the trade run, and it was profitable. Now, for a short position, we're gonna do the opposite. First, we confirm that the market is in a bearish trend. For that, we just need to make sure that the price is trading under the 200 period EMA. Condition number 2 is we identify a key market level and then wait for the price to do a break and a retest of that level. Right here, we have a previous day low, and then the price broke under the level and then did a retest of that level. Now, the third condition is we confirm a bearish continuation by waiting for a red candle to be printed after this retest. And this is it, which makes this our entry candle. Then lastly, we need to confirm that this entry candle has significant bearish volume to push the price in the direction of our trade. For that, we're going to be using the Time Relative Volume Oscillator. We need this last histogram bar to be under the zero level and to also close under this red oscillator. At the same time, it needs to have more bearish volume than bullish volume. And to confirm that, you just want to check to see that the red section of it is bigger than the green section. Looking at this bar, you can actually see that it didn't even have a green section, which makes this candle super bearish. We enter a short position here, place a stop loss right above the most recent swing high. For the take profit, well, we're gonna set it at 1.5 times the risk, letting the trade run and take profit. In summary, the Time Relative Volume Oscillator compares current bar volumes to previous trading days, highlighting bullish and bearish volumes. It's best used on lower time frames because there's more price data for volume comparison. The key features of this indicator include various display modes and volume types. For trade confirmations, you want to ensure bullish volume far exceeds bearish volume on every entry candle. Now, remember to do extensive backtesting and forward testing of any strategy, including this one, to see how profitable it could be over a longer period of time. Well, that's basically everything. I hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching. See you next time.